Welcome to the South Bay FM video podcast. Join real estate broker Michael Dullea and Jeff Bettger as they take you on a tour of one of San Diego's most vibrant communities, the South Bay. Michael and Jeff delve into the local real estate market and explore topics that matter to current residents, buyers, and sellers. Whether you're a longtime resident or considering a move to the area, this video podcast is your go-to source for all things South Bay. So sit back, relax, and let's shine a light on this amazing community.
Hi, welcome to South Bay FM. This is Mike Dullea, and I am your host with my co-host here, Jeff Bettger. Welcome,
Hi, everybody.
Jeff.
How are you today?
Doing good. We're here on our very first episode, and we are going to talk a little bit about our history and our past in the South Bay, how we got here, and how we are both now in real estate. You're a real estate realtor, and
Yes.
I am a lender.
Yes.
And we've been working together for 20 years.
That's right.
And we're going to discuss this today and talk about not only our past and our history, but how we've worked together and what it means to be a client of ours and what we try to do to help people.
Yeah, sounds great. Future episodes, we'll talk about topics relevant to real estate, new developments, interview interesting people from the South Bay,
Get it going from
Yeah.
there. I like it. This is going to be an amazing podcast. I'm looking forward to working with you.
Likewise.
And, I think we're going to have a lot of information for people out there listening and watching, and we're excited to have you.
We've seen a lot of changes, haven't we, Mike?
We have seen a lot.
But, the one thing that has remained constant is, it's been awesome working with you. I think we've done a great job giving great service to our clients. And,
Absolutely.
So our audience gets to know us a little bit. Tell us about your background.
All right. Well, just a fun little fact in psychology, they say that partnerships of any form of business partnership only lasts about 7 years in total. And you and I, we are almost on our 21st, I think. So we're 3 times the average
That's
so far
awesome.
and still going strong. So
Awesome.
It's been fun. So my background's a very interesting one. I started where basically I was born into real estate. My dad had been involved in real estate for, he just retired actually a little over a year ago. He's 51 years in real estate as a real estate attorney. Worked for Chicago Title and Stewart Title and Old Republic, and really helped actually form a lot of the parts of San Diego. The trolley is one of the main things he did. He did the Petco Park as the insurance, and he was basically the top underwriter in all of that. And so I got to hear what I call, or what he liked to call, war stories. I call dirt stories. And basically he would talk about all the different things, the Otay Ranch and some of the stuff and how that ultimately formed. Was actually very heavily involved with my father. And so I got to hear all these things growing up. And in 1994, I graduated from college.
Mike, can I interrupt for 1
sure,
second?
Please.
A lot of people probably don't know what title is. Can you just kind of explain,
sure.
what is title insurance? Why do you need that?
So title insurance, and we should probably do a
Well,
topic
we'll
on
do an
that in the
episode
future
on
for
it,
sure.
for
But
sure.
title insurance basically gives a person the knowledge that the day they purchase that home, and that's one of the unique things in America, is that home is free and clear theirs that day, and it's protected and guaranteed by that title insurance. And they also often handle any kind of boundary disputes or anything else that might involve the actual land itself. And so it's been a wonderful part of our country's history in order to keep values stronger than what a lot of the other world sees. So it's been a very interesting tool listening to it growing up, and making sure that they meet all the different codes and rules. And we are a highly regulated country and have a lot of planning and development that goes into the different cities and different things, and a lot of that's tied to title and how you can use the title properly. And so that's what they do.
So meaning when you buy something, you're assured that, or insured, that someone else can't make a claim and say that that's really their
Correct.
property.
Up to that
makes
minute
sense.
when they record that property, everything is done free and clear. So after that, if anyone tries to claim for that property, it would be you first encumbering with the loan that you did from me. is the number one thing that you normally see. But then, of course, if you do any work or do anything that could cause a mechanics lien or something, that would then follow behind. And then that's your own clouded title that you'll ultimately need to clear up before you sell your home. And that's how that goes.
Makes sense. Thank you. So then from that, how did you choose to make a career?
So I actually, in 1994, we were in a recession. And in fact, my dad was like, stay away from any kind of real estate. This is horrible. You know, that kind of thing. He watched some of his closest friends getting laid off in the business. And it was a tough time. He was nervous for his own job. He had 4 kids being raised, and he was looking, going, man, are they going to get rid of me? That kind of thing. And so he was quite nervous about what was happening. He saw great people lose their jobs. So he didn't think that was going to be good for me, and I was looking at either going into law school myself at the time or going into coaching. And so I was thinking, okay, well, maybe I'll go to become a coach. And as I started looking into it, I realized that that wasn't a profession for me, and not coaching, but the teaching style. It just didn't fit for how I wanted to do things. And so I actually went to church one Sunday with my family, and I ended up in the mortuary business. And I'd never been to a funeral prior to that. And I told the guy I'd give it a year. And at first, I did everything wrong. I didn't negotiate. I was making minimum wage right out of USD. I mean, I made every mistake you could possibly make, making $6.50 an hour with money spent on suits and everything else. I just messed up. And but I gave the year. I was doing that honorable, let's stay there and do this. And next thing I know, I'm working. I kept getting promoted. I kept getting different things. And I ended up in the business for 7 years. And I was basically the mortuary manager at Greenwood, and which is off Imperial Avenue. And I'd worked a couple of years actually at Glen Abbey down in the South Bay and doing that. And it was just a fun learning experience as I was getting life going. I got my master's program, met my wife, and as things started progressing, I was getting a refinance done on my house, and a gentleman named Sam Calvano actually was doing my loan and was like, you're too nice. You need to get into the lending business. And I'm like, what are you talking about? So I started doing actually classes. I bought the Mortgages for Dummies book, and I started reading and started going to different classes on real estate principles and real estate law and real estate finance, and decided I like that. And I decided I wanted to go try it. In fact, I called Sam back, and he's like, you're not working for me. You need to start off in the subprime world. And I looked at the subprime style, and that was not for me either. It was a style of product that it fit for people, and I believe that all loan products have a reason that they're out there and why they could help people. But you also have to find the niches that are best for you and made for you. And so I ended up getting into, luckily for me, I called the Countrywides and the Wells Fargos, and they were like, mortuary manager? Nah, it's okay, click. And Bank of America gave me a shot. And that's where I met you.
That's where we met, yep.
And that was, I have a little, as much as some people do not like them or whatever, I have a little bit of a love for them because they've given me the opportunity to have an incredible career that I can say makes me happy to go to work every day. And so I've been doing this for 21 years, since 2001, almost 22 years now. And it's just been a wonderful, wonderful experience, and I've enjoyed it very much. And I actually met you, I think, in 2002, if I'm not mistaken, and you actually helped me do my first open house.
Oh, nice.
So it was that, and we've been friends ever since. So tell me about your background.
Well, Mike, it started, I grew up in a small town in Colorado, and my parents had a carpet and drapery store. So for as long as I remember, I always helped my parents work in the store, go steam clean carpets, install carpets, window treatments. And I just fell in love with houses. Some people like cars, some people like, whatever. I liked houses. And I was always so intrigued when you walked into a house, the feeling you would get based on the floor plan and maybe the interior design. You know, you felt like, wow, it felt very bright and light in here. God, it feels kind of dark and small. And but then, so I just did that all the way through college. Graduated from college with a degree in computer science, but then went on to the University. That was from the University of Denver. Went to the University of Illinois, got a master's, and I switched from computer science to psychology because I realized I wasn't as interested in machine learning as I was human learning.
Wow.
Because the way humans learn is so fascinating, right?
That makes a lot of sense. I did not realize that you
really?
and I have I was a psychology
There you
major
go.
and a human behavior master, so
There you go.
I did not realize that about you. I knew you were special education. I didn't realize psychology as well.
Yep. So that was my degree. Went on to Rochester, got my PhD in cognitive neuroscience. I was really interested in looking at the way different languages developed, including sign languages. And then I was fortunate enough to go to the Salk Institute here in La Jolla and do a postdoctoral research looking at how different languages, including sign languages, are done in the brain. And at that time, the question is, well, it's hands, so maybe it's different than other languages. And
Can you do sign language?
I can. Yeah.
Wow, that's cool.
It's
I
been
didn't
a while,
realize that.
but
Wow.
yeah, it's so beautiful. It's so unique, right? When you speak any language, you have one articulator, the mouth.
Right.
But with sign language, you have two articulators. So there's a lot more information that you can present with your hands and in very different, unique ways. So I was able to do research there. Wonderful time. Got the opportunity to be a professor. It was a joint doctoral program in atypical language development between San Francisco State and UC Berkeley.
Wow.
Went there. My specialty was doing research, so I was helping the doctoral students do their dissertations. Really enjoyed that. But then, as life sometimes does, my wife became pregnant with our son, and her family was in San Diego. So we thought, well, okay, let's at least move to San Diego. I could teach in San Diego, and we'd be closer to family. And who knows why? At that time, we had I think my wife suggested, like, Jeff, you should seriously consider real estate. You're outgoing, you like to work hard, you kind of have that background. And she had sold real estate before. So I took the risk and, kind of gave up the security of academics. And I started in real estate with Prudential California Realty in 2000. And I just loved it. We're so lucky. That was right when the boom of the building was happening here in the East Bay. And no problem. And my wife, after our son was born, she got her license. She joined me. And then my parents joined me. And we formed a team. And the rest is history. It was so fun because, when we would sell a house, that's something that we could enjoy together, celebrate. And that was neat.
That is neat. You now you moved here in 2000?
2000.
2000.
Yep.
Okay.
Yep. July, and just started off, and away we went. And
So John Henry is your son.
Yes.
And he was
born in
here
2000.
in San Diego.
Yes, in Chula Vista. Yep.
Oh, in Chula Vista.
Yep.
Very cool.
Yep.
At which hospital?
Sharp,
Oh, at Sharp.
which happened to be the same hospital that our daughter was born in as well. So yeah, that kind of has a special place in our heart, of course, up on the hill there.
The Scripps one it used to be called Bay General.
Okay.
And
On East H and 4th?
Yes, and that one was Bay General, and then became Scripps over time. But that was where my three younger brothers were born.
Oh, nice.
So, and I was actually born in Coronado. So born and raised here in the South Bay. I know you came over in 2000,
Yep.
correct?
Yep.
And Griselda was here at the time quite a bit ago.
Yeah,
right?
yeah. She grew up here, basically.
Gotcha.
So,
Okay.
Yeah. So then after, in around 2008, we started a property management company and did that for 10 years. So that was great for my career knowledge. Got to go into so many more homes, got to see which homes were built well, which homes were showing, the need for more repairs, etc. And so that was actually great. I've learned a lot about plumbing and ask me about water heaters and faucets. I know everything now.
The cool thing about you is you get into everything, meaning as you enter into different stuff, you pick it up and you learn. And obviously I didn't realize that you had, the funny thing is I knew you taught at Berkeley, but I didn't realize you had your PhD.
Yeah.
And until you just said that, and it makes a lot of sense. But you go full bore into everything you do, and I've always enjoyed that about you.
Thank you.
It's that energy that you bring to everybody and anything that you do. Everything has to get done just the right way. I love that about you.
I will always feel like I want to know as much as possible so I can give my clients the best possible advice, And so I think you and I both have been very involved in different community organizations and stuff. And that just makes a big difference too. It's like if you know where the next schools are going to be built and that kind of thing, and when the 125 toll road was being built and how that might affect different areas, and now the Bayfront, it makes a big difference.
Yeah, it does.
Yeah.
And I think that's probably why you and I fell in love with the idea of doing this podcast, is that the information that we could share about and share with people about all the different things that are coming into the South Bay right now, from possible universities to incredible state-of-the-art 5-star hotels and
Gaylord,
and Marriott Gaylord or whatever it's called, and then in addition to that, all the different building projects that are going to go with it. And I think I even heard just recently they're putting in offers for the stadium to be put down the street, and just really neat stuff. And we're going to be able to share that on this podcast and what's happening and who's for what and why, and let people form their opinions on what that is. And that's what we do in real estate and in loans. And
Perfect.
I'll kind of go into a little bit, if you'd like, we'll talk a little bit about the history of interest rates.
This is our first episode. This will be fun. Let's kind of look back, and then future episodes we can look at current and maybe the future.
So when I met you, and basically we started in the 2000s, but the fun thing was if we want to take a look at the interest rates, when I first met you, it was in 2002, but I had just in 2001 had been hired at Bank of America. And it was for those who are familiar, it was on Bonita Road, right next to Otay Lakes Road. And that's where I met you, and you were working not too far down the road.
Yep.
And in fact, straight up the road, if I recall right, at the Prudential office.
Yep.
And
right across from Bonita High School.
Yep, right across from Bonita High School, and next to that Wells Fargo, if I'm not mistaken. And so as over the time, I had walked into, the rates had just dipped below 7% for the first time. And as you could look at that, you see 6.97 in 2001. And what happened was I was walking into Vaughn's one day, and they were having this big sale on 7-Ups. And my very first marketing thing, and remember, I'd come from the mortuary, so I had never done marketing or anything else, but I went and bought a whole bunch of 7-Up bottles. And there's this wonderful lady who was a newer manager as well at the time. She's actually one of their senior managers over the years now, is Mary. And you probably know Mary.
Of course.
And amazing lady.
Yeah.
And
the best.
she let me put 7-Up bottles with her, and she put balloons on them, and we had them all over the office.
We can give a shout out, Mary Estrada.
Mary
You're the best.
Estrada, she's an amazing lady. And what ended up happening was we had this incredible surge of opportunity, and it was basically just from having bottles around there that said 7-Up. And so people would say, why do you have 7-Up bottles? And they go, if your rate's 7 or up, you need to talk to Mike. And that was how I got going in the business.
Awesome.
And so that was kind of how it went. And even though you see interest rates in the 5s and 6s, there was actually parts and times where people would react to changes, and the rates were in the 7.3s. I remember some people wanted a 30-year fixed in 2003 or 2004, and you see the rates were 5.83 on average. That's the average rate. But we had locks sometimes at 7.3 because people wanted to secure, thinking the rates were going to go back up because they were much higher.
Got it.
And over time, that started caving people's decisions from going from a 30-year fix to, if you recall, the 5-1 arm surge. And that came along with a period of time where if you look around 2003, 2004, 2005, all the way to 2008, those rates that were sitting there on the 30-year fixed, you were able to get 5/1 ARMs in the 4s. And they were extremely competitive, but they gave people locks. And those started around 2003. And of course, when did the market start to hit was 2008 when the market crashed on us. And so that was kind of that period of time where 5/1 ARMs took off. A lot of people blamed the 5/1 ARM for that, but it really was not the product itself. It was people choosing. The product was not made for everybody. It was made for people that were planning on being gone inside of 5 years. And that was the plan. There was also a loan program that a lot of people talked about, the negative amortization loan. And that loan was great for self-employed people. Like if you were an ice cream owner, you made a lot of money in the summertime. And so you would be able to pay more on your mortgage. But when winter came along and you still had employees to pay and you still had rents to pay, having an ability to pay less on your house helped people get through those leaner times. And so it was a really good product for certain people. It was not designed for the person that had a W-2 income earning a certain salary a year, and they used it just to leverage themselves to afford to get into a bigger home. And that's part of the problem I think you and I were talking about not long ago. When
we look at pricing next, I remember back then hearing people who had just normal jobs saying that they bought 4 investment properties in the last year. And I said, how in the world did you possibly do that? And they said, well, my first one went up in price, so I took out all the money and used that as a down payment for the next one, and it went up. And so they were so leveraged that once prices came down, now they were upside down.
Yes, and unfortunately, the market, we'd never seen a housing bubble before. And there were some predictions possibly, but everyone looked at that and said, oh, that's not possible, it can't happen. But and so they say that again, we're hearing that again. Well, there's a significant differences, and I'll talk about that, and then we'll turn it over to the housing prices. But there's some significant differences from now and then in 2008 when all those things started happening. It was a housing-led recession. And that was partly because builders were building at and in excess of housing need, which was a fantastic thing at that time. And it kept housing, of all things, it seems like it would have kept it down, and yet the prices were at a surging level. We're at a point where after several years going down the road, and builders have not kept up with the amount of people that need homes. And that has created some, what we call supply and demand issues. And so we have a demand issue with a low level of supply. And the recession, if we're going to have one this time, will not be at all home-led. And so a lot of people believe that even though we had that little dip in rates in last year, we're almost already back out of that. And that was from an increase in interest rates that were unprecedented. I think we went from, in fact, it shows there, 2.96 on an average rate to 5.34 in a 1 year period. That's a huge jump. And,
sure is.
And I think it surged even further. As you know, we're sitting in rates often over 6.5 right now. And
can I interrupt? When you look down,
please.
it is interesting to see, though, year to year, changes are pretty small. And then to basically have a 2-point jump, in 1 year, that was not really expected, and it didn't give people a chance to plan and whatnot. That's unbelievable.
It really didn't, and I think that froze. It didn't cause people to panic; it caused people to freeze. And so no one did anything, and so not only was there a limited, and plus in addition to that, we were just coming out of COVID. And so people were kind of making decisions on what was going to happen with the economy. I think there was a lot of things that were going into effect. We're seeing a lot of movement, as you know, in the last couple months. This is a time period in which we'll probably see a regathering if interest rates stay a little bit more calm, let's say around 6.5. I think we're going to see quite a bit of movement again. So
interesting. Let's take a quick peek at, I put together a graph of the average price of homes. So what I did is I took one community, Camelot, which is in Eastlake 91913, and what I like that because there I could I could grab 3 bedrooms that had sold between June and August for each year. So usually in that summertime, there was 3 to 5 3-bedrooms sold. So that held pretty constant. So now I could look at pricing, and you could see about 2005, it hit a peak of 400,000.
Yes.
Again, because people were buying those as investment properties and whatnot. And then we had the crash. And to me, the interesting thing is we didn't get back up to 400,000 until 2020. So it took 15 years for it to climb. And then you can see at 2020, all of a sudden, the steep increase, again, with the interest rates at 2%, off we went. So
that does fascinate me, this graph, because it is almost like it led early, because the big dip happened in 2008, and yet in that home, that it already lost half its value by that point, which I mean, I find that very interesting how it did that, and it was an incredible amount of time that it stayed stable. But that's why whenever we talk to people, and they're always interested, like, when's the right time to buy in the market? And a fun answer is always 3 years ago. And in this particular case, that would not have been the case.
I think the important thing is, and what you and I are both good at, is sitting down with the clients ahead of time saying, what's your goal? You know, are you looking to buy something and live in it for 30 years? Or is this something you want to sell in 2 years? You know, and so, you know, when you look at these kind of charts, you know, that might, and see where we are on a curve, that can help make those kind of decisions.
Yeah, it's a it's funny how, when you look at how long it could potentially take, and it's very funny because when people always are asking, am I going to be able to move out in 2 years? And I actually had a client recently who did exactly that. He actually brought in graphs. It was amazing. He was an older gentleman, and he was trying to help decide if he had passed away at a certain time, how much his wife would make on the house.
Got it.
And I stopped him, and he ended up not buying a house, but which, you know, I'm not sure was good or not. But I did sit down and I showed him. I'm like, you can't guarantee an increase in equity in just a 2-year period. Yeah. But I said, if you give it 7 years to 10 years, you're going to pretty much guarantee that growth. As a general, in this particular scenario, I would have had to actually go a lot longer for him if he bought at the peak. Now, had he bought, let's say, in 2009, and he went to 2015, you could have seen that growth at a steady rate or whatever.
Yeah.
So.
Yep. Oh, I agree. Another thing interesting, though, is, you know, back in 2005, a lot of what we know as Eastern Chula Vista was still being developed. Mm-hmm. And, you know, now it's kind of filling out. Yeah. And we've got, you know, with the 125 going to Mexico, lots more businesses, military still here, Border Patrol. So there's a demand, and a big demand for rentals. And so I think that's what we're seeing, the prices increasing. So awesome.
Yeah, that is. So one of the things that we were going to talk about is some of the developments in technology and the changes to that.
Yeah.
And that's been an interesting effect. You and I were having actually a pre-conversation about this as we were getting ready for the show. And it's unbelievable how we went from so much manual labor, right? Yep. We did things where we had to go to people's houses and and just stand there by you talk about the fax machine, because I got a kick out of that.
You know, I was just remembering, you know, and people forget, doesn't feel like that long ago. Let's say you're my buyer, you want to write an offer. I'd print out a copy of the contract. And maybe you were at home, you weren't available, so I would fax it to you. You would get it off of your fax machine, you would sign it, you would fax it back to me, then I would fax it, you know, probably maybe to the lender and for sure to the listing agent. So by the time that all got done, the quality had been so diminished that you could almost not read what was there anymore. And I just remember so many late nights where I'm trying to feed a contract, which was, you know, 20 pages, and it would feed through maybe 7 pages and then get stuck. Yep. And you get that big error sheet. So start all over. And then you would find out that the machine on the other end wasn't picking up.
Right.
So, or it was busy. Or it was receiving other faxes. So you had to sit there and wait until it was no longer busy. So you could be sitting there for a long time before you knew if your fax went through, and then you just prayed that the next morning, maybe the secretary grabbed all the faxes out of the machine and hopefully distributed them to the appropriate agent. And oh my gosh,
that was unbelievable. The funny thing is we had so much time that we had to put into each file.
Yeah.
And it's interesting because I did just as many files then as I do now.
Yeah.
And people go, or if you're the real estate, you'll talk and you'll hear people go, what do you guys do anymore? It's so easy and it's such an easy business. And then they get into it and go, oh my God, it's not easy. It's
a lot to it.
The changes that have happened, even though the loan programs, we've really reduced a lot of loan programs down to, for the most part, a 30-year fix. But when you look at a 30-year fixed, there's so many different types. You're looking at, is an FHA loan right for you? Is a Cal HAFA loan right for you? Is a 5% down conventional loan if you're looking at beginner style products? And there's new ones coming out where there's zero down and, dream products. And so we always are having to constantly read, and I think what I think we both know that the amount of time we put into our own education and keeping up on these products and
the new
on
laws
those things.
that we were talking about, just the amount of disclosures, and now the amount of time that the clients have to look at the documents has really changed a lot. Don't you agree?
Oh, tremendous. And the loans are actually in some ways harder than they were 20 years ago. And you'd think that it would be easier because of all the amazing technology, which really has helped as far as the ease for a client to sign and review. Yeah. But they are not when it comes to the amount of work and the amount of time and the amount of disclosure paperwork and the explanations to those disclosures and helping them understand exactly what that product is doing for them and why it fits better for their situation. It still takes an expert lender.
Yeah.
It takes an expert realtor to get people through this. I mean, I'm hearing stories about, people going septic searches now and doing things. I mean, they did that back then as well, but it wasn't taught to everybody to know those things. So you had to find the person that was an expert in those things. Now you have to be an expert to no matter who you're meeting and how you're meeting them. And that knowledge is incredible. That
this last year has really turned, as far as the agents go, about fire hazards. And there's new laws about, the seller being responsible for making sure that the home has enough space for fire hazard. I wanted to bring up two more things that technology, I think, has been great as far as allowing me not to be stuck in the office. So, when we had pagers, we'd get a page, go back to the office and make the phone call. Or, you're out showing homes and someone says, I'd really like to see this house. Could we do that? Back to the office. And so having the ability with smartphones to check my email, get on the MLS, whatnot, allows me to not be in the house. And then the other fun thing for me has been, the GPS on our phones.
Yes.
I mean, we were joking about the old Thomas Brother maps.
Yes.
And the problem with those were that in Chula Vista, as developments were happening, the maps couldn't keep up. So I would be looking for a home, and I would look in the square where I knew it was, and it would be blank, So I knew it was in that square, but I would have to drive up and down the streets to find the specific road, right? And so I don't know how we did it,
It was a different time, but it was, in some ways, it was not as hard as it is now. In many ways, to keep up with all the different changes and laws. And when I first got in, and I think most of the years that I've been a lender, the conventional loan price, the limit was $417,000 for multiple years, and then all of a sudden, it just started climbing every year. Yeah. And I think it's like 726 as of today, that kind of thing. And it constantly is changing and altering. And, you mentioned something that was an advantage actually for clients was the MLS.
I think we both agree that's been so beneficial that, you and I like our clients to be educated. That's always been important to us because in the end, it's their decision. And so if they know the market, if they have a good feeling for, let's say they're looking at $700,000 they'll have a good feeling of what a $700,000 house looks like. So if I show them one that's, way more than that, they're like, well, why would I buy this house for $750 when I should be able to get something similar for $700? Right. So that's the type of thing that I think has really been beneficial. I think you and I, again, coming from, a teaching perspective and whatnot, we want our clients to be educated and, we can point out things to them and, make suggestions. But in the end, we want them to be happy with their decision in the long run.
They need to make the decision.
Yeah, and be happy in the long run.
They get to decide when to lock the loan. We can make suggestions. Yeah. They pick. And I've always done that. You've always done that with the real estate. Yeah. You've never pushed anybody into a home. You've always shown them the pluses and minuses. And then when they're ready to pull that trigger, you've been right there and helping them guide each step. And I think that's a wonderful setup that you've done. And
that's been a great advantage. I'll go back to one more thing, which was DocuSign. A lot of our clients in the South Bay are in the military. Mm-hmm. And so the spouses could be, in training or just not available. Mm-hmm. So having them have the ability to get onto their email and DocuSign something is marvelous, because that way they're still part of it instead of just doing the power of attorney.
That's right, because that's what we had to use to do for so many years was the power of attorney. They had to go to the base, get a special power of attorney. Then they had to get it specific on the house, and they had that they were buying or refinancing, and that was always just so hard on the person that was serving. And you've been, we were talking a little bit about different charities, and I was involved in Rotary and different things, but you were always involved in the welcoming of Navy into San Diego, which I thought was really cool.
Yeah, it was wonderful when the Ronald Reagan came.
Yes.
Being part of that port transfer and welcoming everybody was wonderful.
Yeah, that was really cool. I remember how active you were in that.
Yeah.
It's very cool.
We're very happy to have, we're very lucky to have the military here in the South Bay.
So let's end this. Let's talk about the future.
Yeah.
What do you think is going to happen with housing in the next? Let's not go 20 years. Let's go 5 years.
Yeah.
What do you think is going to happen with housing?
I'll talk about, first thing that's coming to my mind is agency. We've seen some attempts by companies to kind of try to do everything online and from remotely. Mm-hmm. And I think we're seeing that's not working, because in the end, Mike, if you want to buy a house in the Chula Vista area, I can help you. I can give you great advice. You want to buy a house up in San Francisco? I don't know where the schools are. I don't know anything about that.
You might as well do it online.
You might, so, I think that having an agent, technology will not replace the local expertise of an agent. That's what I feel like. I think with the access to information, buyers and sellers can just keep making more and more good decisions. And then also maybe the one good thing about COVID was that made us find other ways to advertise our properties. So the advent with being able to take photos and videos with drones, take video tours, the Matterport, which basically gives you a 3D floor plan. That's amazing. That means people can really look in depth at houses without, as a first pass, without having to go in them. So I think that's wonderful. That gives you an opportunity to see a lot more houses.
Yeah.
And I think that type of thing will continue. How about you?
I think if you were looking at lending, and let's do it from the agency standpoint as well, I think that the old is new again. When I first got into the business, there was the banks and then there was the brokers. Mm-hmm. And the brokers were the experienced lenders. They had some different stuff, but the banks often were able to beat them in price. And so it was kind of like, which one did you want to go with? And it was either a bank or a broker. But the broker had the better products. They had where someone was just off a little bit, they made it easy for them. Funny thing is, fast forward to 2008, and the broker world went away, and there was only the banks left. Okay. And you only had a couple banks that were doing everything. And then in came the direct lender. And the direct lenders were an incredible part of our history for basically up to right now as well. And they were basically the broker place where everyone went and then started having all the different products. And their pricing actually became better than banks for a long period of time. And about 2018 or so, I started noticing all of a sudden these, and I was working in the direct lender world, and I started seeing brokers coming back with pricing that was incredible. And now I think there's, the brokers have made it back to about 50% of all business in the United States. I think it's going to continue to be a big part of the market.
Okay.
And I think it's going to probably rise a little bit above that as well. And between the pricing and the people that are doing that, and then the banks, I think the direct lender world is going to get squeezed for a while. I think they're still going to find some form of a niche. I think there's some really deep pockets and some good things, but I think we're going to start seeing banks having a big piece, a big niche again in the parts that they want, and that's what they do. They step in, step out, step in, step out.
Gotcha.
And then the brokers are in it for all the time. Yeah. They're there for you. You could call them, and whatever banks are working for them for that day, they're finding the right pricing, they're finding the right products, and they're giving the customer that. So I think that's going to be a bigger part of the next 5 years again, and continue that way. And I think that the South Bay in particular, since we're South Bay FM, I think we're going to have an absolute big surge in the western side of Chula Vista with all the development that's going to happen. I think we're going to start to really see some good investment opportunity if they were looking at that.
Yeah,
in the lending, I think that the products are going to be a little bit limited until they start changing some of the rules. They've really made it where they're trying to create products for people that are trying to get in as first-time home buyers, but it's limiting the purchases of second homes and investment properties for some people that want to enter into that space. And so there's going to be a little bit of a push and pull until they kind of figure out a sweet spot for that for everybody. So I think there's going to be some big Fannie Mae, Freddie Mac guideline changes over the next 5 years that could potentially change how people buy real estate in one way or another.
If history tells us anything, though, there's always some game changers that come along that are unexpected that we can't even guess now. So that's what keeps it exciting, right?
That is the truth. That is the truth.
Well, Mike, fun episode.
Absolutely.
Great talking to you.
Look forward to our next one.
All right, bye.